Welcome back, folks. Today, I want to discuss the 5 trading tools I use to research the markets, analyze investments, and manage my trades. The first is my brokerage platform, Webull. The second is ETF Research Center, or etfrc.com, which I used to dig deeper into ETFs before buying anything. And the third is Forecaster Biz. You should really check that one out. That's a new AI tool that I use. There are also 2 other tools. One is putting the US 30-year Treasury as a widget on my home screen of my phone, and the other is the MMRI, which I also add on my home screen. I'm going to tell you how to do that. The last 2 are you're probably not going to find in other videos. Anyway, let's start with Webull. The first benefit is commission-free trading. One of the biggest advantages is that Webull offers commission-free trading on eligible U.S. stocks and ETFs. That means you don't have to worry about paying a traditional commission every time you buy or sell an eligible stock or ETF. That's pretty much everything. But for the most part, it's free. Second benefit, it has good charts and market data, so you don't have to be switching between TradingView and otherwise. And that's something I really like, even though you can't beat TradingView. You get market data, watch list, news, and other tools that can help you analyze what you're looking at. It also has an AI tool. The third benefit of Webull, for me, Webull gives you access to more than just individual stocks. Depending on your account and location, you can trade things like ETF, options, and investments available through Webull. You could even place bets like I did for the World Cup under predictions. So if you're just starting out, you just don't have to use all these features. You can just simply start with the basics and learn as you go. Also, they give you, for the first time that you're placing a bet, they give you $20 free bet. All right, the fourth benefit is research and news. Instead of just seeing a stock price, you can access company information, news, market data, and directly through the platform. That puts it much easier to research a stock before putting money into it. And personally, I think that's important because investing shouldn't be about just buying a stock, going up, immediately jumping in. It should be about you doing your research. Always do your research. The fifth benefit is paper trading and learning. You could do that. You could practice. You don't have to put money into it. You can practice as you go. Now, before I go any further, I just want to say, they say the best things in life are free. If you happen to watch this video and you've come this far, trust me, it's going to be worth your time and money. If you actually take notes, add this as a watch list to your favorites. You can come back to it because it actually has really good information if you stick until the end. The sixth benefit is fractional shares. You don't have to buy a whole share all the time. Webull supports fractional shares. So if something is very expensive, like $1,000, you could buy a fraction of that share instead of buying the whole share. If you don't want to invest $1,000, put a gamble on a stock completely that's worth $600 or whatever it may be, you could buy half, 1/4, but it has to be a stock that has a high liquidity. And the seventh benefit is it's user friendly. I've tried other apps. Webull is up there, trust me. You can also, and this is what I do, invest and pay the $40 per annum Webull Premium, which gives you I believe 3.35 APR on unused cash. So let's say you have, just for simple numbers, you have $1,000, 500 of which are invested in stocks. You're left with $500 sitting there. You collect interest daily, so you don't have to wait a whole month to collect the interest payment. And it's not a traditional like savings account where you only get the interest paid after a month. No, it's accrued every day, which I really love about. And I really think it's worth it. If you're going to put more than $1,200, they're going to match. If you get, this is what I did. I'm going to tell you what I did. I put $1,200 directly into Roth IRA. And with the Roth IRA, with the premium, you get 3.5% match, I believe. That in itself pays, if you put 1,200, pays and gives you some more back for the $40 charge that you pay for the entire year. Now, the other tool that I want to talk about is ETF Research Center, which I went through this. I diggled a bit on a previous video. etfresearchcenter.com. It's a website. You go there and you have a whole bunch of tools. If you want to see how much two ETFs or two stocks are overlapping, if you want to diversify a little bit, that's a perfect tool. It also tells you the cost analysis, everything, whether it be a technology ETF, a semiconductor ETF, or if you have four different investments. But it can be a significant overlap between them if you have more than one ETF. So it's really good if you look at this ETF. If you're not into ETFs, you could just skip this part. The second benefit is doing some ETF research. It also researches individual funds and look at things like performance, fundamentals, sales, earnings growth, estimate revisions, and valuation metrics. So it's simply, if you're just going to say this ETF went up a lot, so I'm going to buy it, you can actually investigate what's inside it, right? The other benefit is also the ETF screener, which is a feature that I like. Instead of scrolling through hundreds of ETFs manually, you can screen funds based on different criteria. That can be useful whether you're looking for growth, value, or a particular sector, a particular strategy, or other characteristics, right? It makes it much easier to narrow down a huge universe of ETFs. Now, the fourth benefit is the stock locator. Yes, there's also a stock locator in this ETFresearchcenter.com website. You can enter a stock ticker and find ETFs that have exposure to that stock. That's useful if you like a particular company but want to get exposure through a broader ETF instead of buying an individual stock, right? So if you want Apple, you don't have to buy Apple. You could buy an ETF that maybe allocates 10% or 15, 20% of its portfolio to Apple alone, right? Another benefit is the builder. You could create an ETF portfolio and analyze things like sector allocation, geographic exposure, fundamentals, and valuation. One of the things I find particularly interesting is the ability to examine overlapping the portfolio. So instead of simply asking how many ETFs do I own, you can ask the much more important question, how diversified am I really? That's a completely different question. So now I want to pause just for a minute and ask for something. Now that we spoke about the ETF Research Center, etfrc.com, this is one that I really like, and it's new, and you probably never heard of it, which is forecaster.biz. This is where I add an AI powered layer to my market research, and the idea isn't that AI can magically tell you what the market is going to do tomorrow. Nobody can guarantee you that. Instead, Forecaster can help you look at the historical data behind behavior and identify situations that are similar to what you're seeing right now. You should also stick around through the entire video because I'm going to, whenever I can, I'm going to go off on rants just the way I am doing right now. For example, just going to give you one thing that most people don't know. Preceding every stock market crash, there is almost always, without any question of the doubt, uh, oil crisis. Even if it's completely unrelated, you go back to the dot-com bubble, you would think, what the hell does oil crisis have anything to do with it? But if you go back, as a matter of fact, don't trust me, Google it or use ChatGPT or whatever AI tool you use. It'll tell you. The financial crisis. You think big banks, you think Wall Street, you think derivatives gone wrong, all that stuff, everything financial. Well, 2006, 2007, there was an oil crisis. You go back to COVID, oil crisis. You go back to this recent correction. Um, well, this was directly, the Iran war, so that makes sense. But if you go back to every major correction or market crash, if you want to call it, there has been an oil crisis, just to let you know. So going back to forecaster.biz, I'm just going to give you a few benefits. You should really save this. It's really good. There's historical market projections. One feature I find particularly interesting is the projection tool. It looks for historical setups that resemble current market conditions and can show bullish and bearish scenarios along with the probabilities and a robustness score. And that's interesting because instead of asking, is the market going up or down? You can start asking, when the market looked like this in the past, what happened next, right? That's a much more analytical way of looking at the market. Another benefit is the bullish and bearish scenarios. Rather than forcing you into a simple yes or no prediction, the analysis can show you different potential outcomes. For example, it gives you a way to think about both the upside and the downside. And I think that's important because when you're already invested in something, it's very easy to become biased toward the outcome that you want, right? Looking at both sides can help you keep you more objective. Another benefit is the probability based analysis. Another benefit is the multiple markets. Forecaster isn't limited to one particular stock or ETF. You can use its analysis across different markets and instruments, which makes it useful when you're looking at the broader market rather than just one company, right? And how do I use Forecaster with Webull and ETFRC? Let's say I'm interested in the NASDAQ, right? I can use Webull to look at the actual market, charts, and price action. Then I can use ETFRC if I'm buying an ETF to research an ETF such as QQQ and understand exactly what I'm getting exposure to. Then I go to forecaster.biz to investigate the historical markup setups and potential scenarios. There are there are way more tools with forecaster.biz. I suggest you check it out. If you want to, I could do a video just on that. So I'm looking at price, fundamentals, portfolio exposure, historical patterns, and AI assisted analysis. I'm covering every ground. So let's look at something a little different. One of the tools I use isn't even something I have to open. I have the 30-year Treasury yield right on my phone's home screen. I set this up using TradingView. So I don't have to open an app, search for the 30-year Treasury yield, and dig through the charts every time I want to know what's happening with the Treasury yields. Why do I use the 30-year Treasury yield? Because the market gauges the 30-year Treasury yield to see if it's risk on or risk off. Are the is this big money? Are they going to be risking their investments when the Treasury yield is skyrocketing? Whenever you start seeing a rise, it's not so much how high the interest rate is; it's the speed at which the interest rate is climbing, right? So if today it's 4%, tomorrow is 4.1, the day after is 4.2, the following day is 4.3. The market is going to pull back, be like, "Whoa, what's going on?" High interest yields scare off money from the market, and when that happens, gets pulled out, they sell off, and that's what happens. That's why I always have. Unfortunately, I'm using my own phone to record this video. Otherwise, I would show it. Actually, when I edit this video, I'm going to put it on. Right now, it's something very important for you to have. We are at the highest level since 2007, right? So right now, last time I checked on my phone, it was 5.2%. We are at very high levels right now. Now, can it go to 6% without a market crash? Yes, but it would have to move very, very slowly because right now we are at a very delicate point, right? So you always want to look at the thing. Um, if it's going down, almost always, unless there's some other news going on, some other factor that's affecting the market. If everything else is running smoothly and normal outside of the 10-year Treasury yield, if the Treasury yield actually drops in value, you have a very good chance to say, yep, the Nasdaq is going up, the S&P 500 is going up, the Russell 2000 is going up, the Dow Jones is going up, everybody's going up. It's given. When it rises, especially at a high speed, that's when you got to step back. So that's why I have it on my phone. It's very simple. What you could do is you could just install TradingView on your phone, and without even opening TradingView, add a widget from TradingView onto your phone screen. Right from there, you long press it, and then you search for the 30-year Treasury yield. This can apply even if you're not American. Let's say European. Uh, this is going to affect you. Anybody, wherever you are in the world, this is going to affect you because the US dollar, whether you like it or not, it's the world reserve currency. So whatever happens with the dollar, it is going to affect you indirectly, directly. It's going to affect you. All right. The other one, and if you made it this far, congratulations, because this is a good one, is called the MMRI, the Manarino Market Risk Indicator. As a gauge, you just search MMRI risk indicator, market risk indicator, and save it onto your home screen. And if it hits 300, if you have positions that are in the green, you may want to pull out or you may want to diminish. So let me break down the benefits. It gives you a quick market risk snapshot. Without doing all this analysis, you just look at the chart. Is it high risk? If it's over 300, step back. If it's over 290, be careful. If it's over 200, still be careful, but over 290, be very careful. I've noticed that when the MMRI was below 200, people kept on calling for a crash, all this, and that, and the market just kept on rallying up, 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 up. It's basically an equation where it has the 10-year yield and the value of the dollar, the Dixie, and then it gives you a number range from 0 to 100 to 200 to 300, and above 300 it's very extreme and very volatile. So just like the treasury widget, I don't have to open another app. It's sitting there right on my phone. I can see it in seconds. I don't use the MMRI as a magic buy or sell signal. If the market is moving sharply and I see the risk indicator, whatever. So yeah, this is how I make my decisions. The last two are very easy. They're quick and go. 2 hours before I take a look, what's going on? U.S. Treasury yield, and then MMRI. Okay, and then go from there. So if you're looking for a brokerage that gives you access to tools, ETF, research, charts, market data, and the wide range of trading tools, Webull is definitely worth checking out. And if you decide you want to give it a try, my Webull referral link is in the description below. If you use my link, you will be eligible to use that promotion. So with that said, MMRI, the widget for the 30-year Treasury bond, ETF Research Center, you could skip that if you're just doing stocks, Forecaster.biz, and Webull. That is what I use. I'll put the relevant links in the description so you can check them out for yourself. And if you found this video helpful, hit the like button kindly, folks. Before I end this, I want to say I've noticed that y'all liked me doing videos with females here in Kenya, but sometimes it's not always about having fun, good times. Sometimes it's about being a man and making financial decisions, improving yourself, improving your wealth, leaving a legacy for your kids. So I hope this helped, and if it did, give it a comment, give it a like. Sawa.